There are limited tax changes that have been introduced in this year's budget, and the changes that have come in apply to salary and wages, customs, export tax rates and excise duties. In relation to salary and wages, employees are going to be happy on the one hand that the tax-free threshold of 20,000 kina is going to be made a permanent change, but on the other hand are going to be unhappy that the dependent rebate is going to be repealed, which means that overall employees that have dependents will be in a worse off position given that that tax-free threshold has been set at 20,000 for the last 12 months or so. In relation to the excise rates, these are the typical increases that we see applying to the tobacco industry. The customs changes relate to certain manufacturing sectors and is designed to encourage more manufacturing and employment in PNG. And the change in relation to export tax rates applies to the logging industry, where they've seen significant increases in these rates over the last few years, and the changes are going to reduce those rates back to 2022 levels. The one surprise from a tax perspective is the increase in tax revenues of 43% that's forecast to be earned over the next 5 years. And the key driver for this increase in revenue is through economic growth, which in turn leads to increase in corporate income tax, personal income tax, GST, and dividend withholding tax. There is also a new tax being proposed, which is an export tax that would apply to the fishing industry. The IRC and Customs are also being provided with more funding in order to try and collect this tax. But given that the key driver behind the expected tax increase is through general economic growth, it seems that this 43% target does seem to be ambitious.